Welcome to the Millennial Report on Nasdaq, hosted by MarketSnacks, the ultimate source of daily financial news for millennials. Sign up for our daily e-newsletter. We love working with the guys at Nasdaq. My name is Nick Martell, co-founder and co-CEO of MarketSnacks, here with my colleague,
Jack Kramer, the other side of the coin, co-founder and co-CEO of MarketSnacks. Before we get into what we broke down in MarketSnacks newsletter this morning, let's acknowledge where we're at. Right in Times Square at Nasdaq, straight out of Nasdaq. Great studio here.
Sports Center of Financial News Studios. We love it.
Nailed it. Yeah.
Great lighting.
It's an awesome place to be.
Best lighting in the biz. But today we're going to go and jump into everything we talked about in MarketSnacks this morning because it's a big earnings season. Post-holidays, everyone wants to know what happened in the fourth quarter, wrapping up 2017. This week in particular, how would you describe it? Juiciness. It's intense. It's
the
big.
earnings season? Oh,
yeah.
This week?
What is that like? What is that like for you?
It's dense, it's heavy, it's filling, it's tasty.
Yeah.
Either a protein shake or a burrito.
Burrito. How apropos. Perfect. Reminds me a lot of what's happened yesterday and what's really happening today with Chipotle stock. Chipotle, a company we love chatting about because, frankly, it's been a crazy millennial story of the last 2 years, really driven by its norovirus outbreak. But this past quarter was basically like one of those burritos you get from Chipotle where it's poorly wrapped and they kind of like have to re-wrap it for you.
Something's missing.
You undo the tinfoil and you're just disappointed and you realize you forgot to drop $2.95 to get the guac.
Yeah.
$1 billion in sales, but that's a 5% drop from the previous year.
Yeah.
And there was a 76% drop in the profits. Better than the 20% sales drop in October, but this was not anything impressive.
Yeah, what's hurting the profitability is actually the butter for millennials, avocado.
Beautiful.
The good fat, as we call it. Avocado prices are up right now, and they're actually expected to go up, especially if the guac tax comes into effect, which is Donald Trump's proposed import tariff from things coming from Mexico. 90% of Chipotle's avocados are coming from Mexico. So, you know, we talk about who's going to pay for the wall, right?
Yeah.
I mean, it's not going to be China. It's not going to be Mexico. It's going to be me post-workout with my burrito. Right?
And it's not just the avocados, dude. It's limes.
Yeah.
Like 100% of those limes they just squeeze on at the very end of your burrito assembly line.
Yeah, so this is
They're all coming from Mexico.
economics in action, hurting the lunch budgets for millennials at Chipotle.
But this has also been a year of major distraction. So you have that norovirus scare that's caused sales to drop the last 2 years.
Never ending.
E. coli outbreak. And that's been a major
Crisis
distraction.
to crisis.
What's the big thing? It's mobile payments. It's millennials buying burritos using their cell phones, not happening to the same degrees as other competitors.
Yeah.
So you look at what Chipotle missed out on, and it was investing in the infrastructure to build up a loyalty base digitally with an app, through mobile payments, through a loyalty program. Look at the competitors. So Starbucks has that loyalty app. Panera Bread's the most boring fast casual chain of them all. Even they're focusing on having like an online delivery system. And Domino's, you and I have been talking about
Ordering
this.
by emoji.
Yeah, order by emoji. We talked about that 2 years ago.
You can't let
MarketSnacks.
Domino's beat you in tech, let's be honest. They're making pizza. But speaking of tech, Amazon had a huge, especially hyped earnings report last season. I mean, look, it was the holiday season. That should always be huge for Amazon, but their sales only went up 22%, came in at about 44 million. Disappointed investors. The bar was very high, so shares are down about, I think, 4% the last time I checked today.
But probably my favorite stat out of the entire holiday season came out of Amazon, out of this earnings report. You told me it. And it was that for all the new holiday sales that occurred online this holiday season, 43% of them happened with Amazon.
Yeah, that's
amazing.
That is a huge conversion rate.
Huge.
Incredible. Especially because Walmart and everyone else in the game is doing whatever they can to stop Amazon from taking their business. Still, they're winning 43% of new online sales. It's insane.
And Walmart's doubled down on that competition. They really want to go head-to-head with Amazon. So last year they bought Jet.com. Now they've built out the infrastructure. And they've even got that Prime-like competitor.
Right. $50 a year, unlimited 2-day delivery. I mean, they copied and pasted Prime but made it half the cost. Still, Amazon can't be beat. If you're worried, though, that Amazon made too much profits last quarter, which is actually somehow a concern, they made about $750 million in profits, which is up 55% from last year. And Amazon, you know, historically is not making any profits. They just plow all their money right back into their business. So 2017, they're going to go back to those norms. They have a massive expansion plan. They're spending like a Russian general who's had too much vodka.
Exactly.
They're building an air force, a ground force, and even a sea force. In Kentucky, they'll have their first air cargo hub, where they'll be shipping in Amazon planes in and out. They're shipping their own goods from China on their own massive cargo ships, and they've actually signed up, they've pledged to President Trump, of course, to employ 100,000 new workers for their ground game to make Prime as seamless as possible.
That's great, creating jobs. On the flip side, they're kind of putting UPS and FedEx on the corporate endangered companies list.
Yeah, honestly, that might be another company that Amazon puts out of business. I mean, 2017 is going to be a make or break for those two shipping companies.
Yeah, UPS just announced earnings this week and warned that it could really barely keep up with all the surge in online demand. 13% more online sales this year than the previous year. UPS shipped a record like 700 million packages. And one of the problems is that last mile, getting the packages from the truck to individuals, because half the people under 30 are ordering Christmas Eve for next day delivery. And that's really starting to be a pain point for them.
Yeah. So it's going to be hopefully good for the country, this economic stimulus that Amazon goes on with its huge military spending, so to speak. But interesting story.
Well, that leads us into retail. And I know we saw earlier that Macy's stock was actually halted after there was some acquisition chatter from Hudson Bay Company. The company had actually bought Gilt last year for a really nice discount from its initial valuation.
A little higher, more high-end retail, though. What do we got today?
Well, retail is, a little higher end, a little preppier,
a
little bit more pop in that collar. And that's coming at Ralph Lauren. And we're talking about CEO Steph Larsen, or as we like to call him on MarketSnacks, Lars.
We call him
Lars. Lars shockingly just quit yesterday from Ralph Lauren. He pulled the Derek Zoolander, dropped out of the fashion biz, basically go meeting up with the family back in coal mining country.
This guy.
Stock dropped 12% yesterday after this happened.
Yeah, obviously came in as bad news. Lars chopped his teeth at Old Navy, where he turned things around despite the rest of the Gap products kind of going into the basement.
Every other brand at Gap.
So he got hired 2 years ago, signed up. The founder of the company, Ralph Lauren, refused, though, to give up the creativity and the style control. So Lars was in charge of business and expansion and turning things around, but he couldn't touch, basically, the Polo logo on the shirts. That's Ralph's
Except for those
domain.
Absurdly big ones that they came out 2 years ago.
Oh, please get rid of those. Anyway, we have been hearing some rumors that there's been a little bit of a power struggle between these two, and that's basically why Stephen Larsen stepped down yesterday. He, at the next part of his turnaround plan, had to change some stylistic elements of the brand, but Ralph Lauren kind of wouldn't give it up to this 43-year-old Swedish guy, who's an American iconic brand, right?
And he's been trying hard. I mean, last year, Lars devoted to his multi-year plan to turn around the company, focused on what he called the way forward, which sounds kind of like this cultish community, but it was actually the cost-cutting plan in 2016 that he unveiled, which involved first closing 50 Ralph Lauren stores that were just poor performers and cutting about 8% of his workforce.
Yes. So shares are down. Hopefully all of that pain wasn't for naught and they figure out a new CEO and get back on the horse.
But this is the broader industry trend, right? Like we've been talking about this in MarketSnacks all holiday season.
Retail, cutting staff, closing stores.
Macy's, Urban Outfitters,
yeah, it's
Michael
the evolution.
Kors, you name them all.
Yeah.
They're all suffering. And it all comes from the e-commerce and the fast casual.
Yep.
So the other real pain point here.
Fast fashion.
Fast fashion. Good point. Sorry, I got my Chipotle mixed up. Fast fashion. So you have Zara, you have Forever 21. They're saying, screw it, we're not going to do the whole seasonal thing. We're just going to pump out new lines of clothing before you even know that you need it.
Yeah.
And that's just completely changing the game for these retailers used to singular seasons and also just slower pace to catch on to trends.
Yeah, speaking of changing the game, GoPro is trying to change their own game by expanding beyond their core market of extreme action sports guys into sort of non-athletes by making a drone, right?
Right.
So in October, they came out with their drone. 2 weeks into the game, they had to recall it because of issues with the battery where it was literally falling out of the sky.
Like there are YouTube videos of these actual Karma drones falling out of the sky because the batteries just stopped working.
Yeah, obviously
which is great press to a certain point.
Great press.
And you can't actually buy one because they're pulled from the stores.
Yeah, if nothing else, they made an internet viral sensation.
Yeah.
But their earnings report yesterday was pretty rough. Sales came in about 20% less than what analysts wanted, And basically, it's because the whole holiday season, they did not have the benefit of this drone business segment. It was on the shelves, it was off the shelves because it had been recalled. And just finally, on Wednesday this week, the CEO, Nick Woodson, put it back on for business.
And it's back to basics for these guys,
Yeah.
right? The entire story of 2016, when it came to GoPro, was really messing up the supply chains. It's like they couldn't just get the products in stores, and they couldn't get it done well. So before there was this whole drone debacle in November, before that they had the Hero 4 camera come out. Again, messed up with the supply chain, mispriced the thing. They ended up cutting the price in half with retailers. And the only reason they actually ended up selling any this past holiday season is because retailers like Best Buy did their own promotions for it to try to get it off shelves. Because they were just so sick of having these things.
Yeah, GoPro's nailing it, though, with their social media game.
Yeah.
It was actually the highlight of their earnings report yesterday.
Kind of a desperate point there.
Yeah, I feel like I should be bragging about this. My likes on Instagram went up 50% compared to last year. Cool, man. We don't see how that's going to translate into higher sales, but that'll be their challenge.
Yeah. So that's really what's surprising the tech industry right now is some of these tech-enabled toys, the actual hardware products. You're seeing the same issue with your Fitbits. And we referenced this last week in MarketSnacks that Fitbit announced its holiday sales probably not as good as expected. Now, they surged to the top of the most downloaded app for a period of time over the holidays, but they still are having trouble themselves with adjusting to new products.
Yeah, so mobile in general was a big theme this week. Facebook, 84% of its ad sales are mobile now. iPhone, 78 million iPhones were sold last quarter. It's a record. So if you want to invest in tech right now, make sure it's mobile.
Yeah, and Facebook still impressively snagging those mobile ad sales, but particularly with Instagram, where they're seeing video ad sales kind of lead the way.
Yeah.
The big question on mobile for these guys is artificial intelligence and virtual reality and how they're going to get that into the game for mobile.
Yeah. For more, make sure you check out MarketSnacks email newsletter. It comes out every day. It's your quick, clear, and entertaining way to figure out what's going on in the markets.
And we're excited to be here at Nasdaq. We love being on, and we will see you all soon.
Thank you.